My name is Andrew Stonson. I want to welcome you to this Valuation Masterclass Bootcamp presentation on Walmart. This is a final project of one of our students in the Valuation Masterclass Bootcamp number 19. Bootcamp number 20 starts on March 3rd. To learn more, go to valuationmasterclass.com. Hopefully, we'll see you there. So let's kick off the show. One moment. All right. Are you ready to rock?
Yes.
Yes. Yeah. Make sure you speak up when you're presenting. Let me make sure that we get our presentation up here. Okay. So the presentation is up now. I'm going to leave in just a second. Okay. So as soon as I leave, then you start. All right.
Yes.
Okay. So make sure you bring your voice as you come out. Okay. I'm leaving now, so you can start now.
Hello, everyone. Good evening. I am Azra Sayeda, and I'm going to present my report on Walmart. My analysis is focused on its financial outgrowth, growth strategies, and valuation. And based on these, I initiate coverage on Walmart with a buy recommendation based on a target price of 101 US dollars, implying an upside of 10% from the current price $92. I derived the target price from a DCF based valuation using a WACC of 6.4% and a terminal growth rate of 2%. And the highlights. We all know that Walmart is a giant retail, and the highlights that include AI driven automation. Walmart is using artificial intelligence to enhance its operational efficiency. International expansion. The company is expanding aggressively into the emerging markets, and this could position it as a long term growth. Digital first approach is future proofing. It's using digital first approach to future proof its retail leadership. And the risks. Every investment comes with a risk, and Walmart has no exception. And the risks that to be considered are e-commerce investments, supply chain disruptions, rising regulations, and increased competition. This could challenge its profitability and market dominance. And the company background. Walmart is the world's largest retailer, operating in 19 countries with over 10,500 stores. With a 25% share of the US grocery market, it leads in retail, excelling in categories like grocery, merchandise, and health products. Walmart operates global brands like Flipkart and Equate. The company integrates technology in supply chain automation, AI, and sustainability, with 47% of its operations powered by renewable energy. And recent investments is aimed to enhance supply chain efficiency and expand e-commerce, reinforcing its market leadership in both retail and online shopping. And coming to the stories, AI driven automation. Walmart is leveraging AI driven automation to address rising costs and enhance operational efficiencies. The company plans to automate 65% of its stores, partnering with Symbotic to implement advanced robotics and digital twin simulations. And according to Walmart investor report, this automation is expected to increase margins by 20% in annual free cash flow by 2026. And this strategy is already deployed in over 1,700 locations, optimizing its supply chain, accelerating delivery, and improving customer satisfaction. Imagine you walk into a Walmart store and you see robots handling inventory and the checkouts happening instant. It sounds interesting, right? But that's exactly what's happening now. So, based on these projections, I foresee a significant improvement in Walmart's operational efficiency, which could potentially contribute to an estimated 30 to 35% increase in annual profits by 2026. And the second story, international expansion. As domestic growth slows, Walmart is aggressively expanding in India and Mexico, which are emerging as key revenue drivers. Its $16 billion investment in Flipkart has positioned it as a leader in India's e commerce market, expected to reach $350 billion by 2030. Meanwhile, Walmart stores in Mexico are benefiting from rising middle class spending and digital transformation, helping drive international revenue. So I expect international revenue to grow by 20% by 2028, eventually comprising 30% of Walmart's total revenue. And digital first approach. I know that many of us prefer shopping online, so this digital first approach could be targeting us. So Walmart this is expanding its omnichannel retail strategy to enhance customer engagement and revenue growth. Its private label expansion is set to add $2 billion to annual operating profit by 2025, leveraging cost effective production and higher margins. Meanwhile, Walmart Plus memberships. How many of you know about Walmart Plus? This is like Amazon Prime but for Walmart, and these are increasing by 20% annually, reinforcing customer loyalty and boosting its recurring revenue. In 2023, the US e commerce sales rose by 12%, based on primarily driven by online and Walmart Plus subscription. So I expect its market share to increase by 5 to 7% over the next 2 years, reinforcing its dominance in the grocery sector. So we all know that Amazon is the king of e-commerce. It started in e-commerce and now moving to physical retail. But Walmart has started in physical stores and now coming to dominate the e-commerce. This battle isn't over yet. So based on the strategic investments in AI, international expansion, and digital first approach, this could push it to the Amazon's level. Coming to the industry analysis, consumer staples. So imagine you walk into a grocery store and you see everything is freshly stocked and available at best prices. But what is driving this smooth experience? Let's have a look into that. Resilient demand ensures stability. The staples retailing industry is valued at approximately 2.3 trillion US dollars in 2023, driven by steady demand for essential goods like food, beverages, and personal care items, things that people buy no matter what. Dominated by Walmart, Kroger, and Carrefour, the market's annual growth of 4% reflects its robustness amid economic uncertainties. So, no matter how tough the economy is, people will still buy goods and essentials. Evolving consumer habits. Changing consumer preferences for organic, eco friendly products are reshaping the industry's value propositions. With 42% of consumers preferring organic staples and 67% shopping online, these initiatives are becoming non negotiable for retailers. And inflationary pressures and supply chain disruptions continue to test the resilience of retailers, but strategic players like Walmart are countering these challenges through automation and partnerships with local suppliers. So, consumers' staples isn't just about selling foods and essentials, but it's about adapting to the evolving consumer habits and overcoming supply chain issues. And let's have a look at the quarterly data. We can see that total revenue grew 5.5% year on year, driven by strong e commerce and comparable sales, flat quarter on quarter due to seasonal factors. Gross margin it dipped to 25% as higher costs offset a 6.6% year on year increase in gross profit. Net profit surged 9-10% year on year. It's fueled by foreign exchange gains and reduced e commerce losses, despite rising SG&A expenses pressuring EBIT margins. And the latest news Walmart Canada is investing $4.5 billion in Ontario and Alberta by 2027. TD Cowen has raised its price target for Walmart to US dollars of 110. And Walmart reported strong financial growth in second quarter of 2025, with total revenue reaching 169 US billion dollars. And the consensus estimate over 68% of analysts hold a buy recommendation on Walmart, while 25% recommend a strong buy. The mean target price indicates a potential 8% upside, with a current price at $92 and a target price of $99. Consensus predict a decline in revenue growth from 6% in 2024 to 4% in 2027. Net margin is expected to remain stable at around 2.8% in 2024 and 2025, followed by slight improvements to 3.3% in 2077. So this could say that while Walmart is not a high growth stock, it looks like a strong and reliable investment. And the revenue, Walmart's fiscal year 2024 is driven by three segments: Walmart US, Walmart International, and Sam's Club. Walmart US contributes 69%, focusing on groceries, merchandise, health, and wellness. Walmart International contributes 18%, with operations in 19 countries, including Mexico, Canada, and India. An investment in Flipkart and PhonePe enhance its global e commerce presence. Slams Club, accounting for 13%, leverages a membership model to offer bulk products, fostering customer loyalty. So revenue grew by 5% in 2024, driven by a 5.5% increase in Walmart US comparable sales. And the FEMR framework, Walmart appears to be attractive relative to 1,790 non-financial companies in USA, considering fundamentals, valuation, momentum, and risk. Fundamentals, it's ranked at the top in the US due to highest revenue compared to the industry average and an increasing asset turnover. Valuation is average, as trades at moderately expensive multiples relative to the benchmark. And momentum is ranked below neutral, as both price and fundamental momentum have delivered moderate results but can be improved. Risk, the balance sheet risk is ranked above average, as current ratio is low and the net debt to equity ratio is high. But the price risk measured in terms of beta to the US market is low as well. And let's have a look at profitable growth. It's ranked average among 550 large consumer staple companies globally. Profitability has remained consistent in 2022 from a 2 to a 10 and is now rising. Asset efficiency has been a big positive for Walmart. Expense control has ranked below average since 2021. Sales growth and expense direction have both fallen drastically in 2022. Thereby, the major weakness here could be expense direction and control, and the main strength is asset efficiency. And let's have a look at profit and loss statement. We could see the revenue is growing steadily, and the balance sheet assets, the total assets are rising, which could say the Walmart is strong in its financial position. The debt, balance sheet liabilities, and equity. The debt is reducing, and the equity is growing fast. And here we have a look at balance sheet cash flow statement, the ratios of Walmart. Continued. And let's have a look at free cash flow data of Walmart. The free cash flow of Walmart is a game of investment and returns. So Walmart's free cash flow is set for $46.5 billion by 2031. It's a strong comeback for Walmart. And we can see depreciation and capex are increasing steadily. Although in 2023, NOPAT and EBIT took a hit, and also the FCF per share of US has rise to 5.8 per share. And evaluation on the forward 2025 EPB multiple, Walmart looks expensive compared to the USA, Asia, and global market. I forecast its ROE to be around 24% in 2025, lower than the USA average but higher than Asia and the global market. This results in Walmart trading at a significant premium based on PV to ROE multiple, indicating that it's relatively overvalued compared to global and Asian peers as well as the broader US market. Sorry. On the forward 2025 PE multiple, Walmart trades at a premium compared to the USA, Asia, and global, with a PE of 32x, significantly higher than the market averages. I expect Walmart's EPS to be 33% in 2025, a strong recovery from the negative growth in 2023. However, the 2026 EPS is expected to decline around 1%, which may impact future valuations. This results in Walmart trading at a significant discount based on the PE to EPS multiple, making it appear undervalued relative to global and regional peers. And the valuation and target price, I assume a risk-free rate of 2.5% given the current interest rate fall and a market equity risk premium for the USA market of 6%. Walmart has been a low beta stock, so I assume a beta of 0.8x, which is slightly higher than its previous averages, resulting in cost of equity of 7%. I forecast a capital structure with around 18% debt to total capital. This results in a WACC and discount rate of 6.4%, nominal growth of 2%, and free form because Walmart has significant capex for growth. In my best case scenario, I anticipate a gross margin of 25%, leading to a value of 101 US dollars per share based on the FCFF methodology. This represents a 10% upside compared to the current market price. And the sensitivity analysis, in the best case, in the optimistic case, the gross margin to be 26.7%, which could turn out to be the target price of $114. And in the pessimistic case, the gross margin could be 22.7%, which could have a target value of $88.4. And the risks include the e-commerce expansion. Walmart's aggressive push into e-commerce is a bit costly. So, despite investing billions in digital growth, Walmart's US e-commerce, the market share remains around 6, while Amazon, which is the king of e-commerce, dominates with over 35. So, online retail generates lower margins than the in-store sales. And the supply chain disruptions, these are under constant pressure from rising costs, trade tensions, and supplier disruptions and regulatory pressures from labor laws to environmental mandates. Walmart faces growing regulatory scrutiny that could lead to rising compliance costs and legal risks. And in 2023, the company spent over $2 billion on compliance and legal settlements. So, and the final risk, tougher competition. Walmart, it may be the bigger retailer, but its competitive mode is shrinking, and discount chains like Dollar General are gaining ground in rural markets, while Amazon continues to dominate online. So, even in physical retail, Costco's membership model gives it a pricing edge, with Walmart's US sales growth slowing and its e-commerce business still trailing competitors. It risks losing market share and pricing power, which could directly impact long-term revenue growth of Walmart. So while Walmart it still faces challenges like margin pressure, supply chain issues, regulatory pressures, and the quite fierce competition, its strategic investments in AI and global expansion, and also the digital transformation, it looks and also with a solid free cash flow outlook and its market position, it remains a resilient player, making it a compelling buy at the current price. This was my presentation. Thank you.
Okay. So let's go up to your free cash flow page. Let's go up to that free cash flow page.
Yes.
Okay. If I look at the growth in free cash flow in 2026 and onward, it's, 8, 5, 8, 3. But when I look at your stories where you talk about how certain things, like in your first story, you said that it could impact revenue by as much as 30% by 2026. Uh, are you saying that that is a possibility and you're not putting in the numbers, or how do you reconcile? Because I think the stories that you presented, were pretty positive. Is that all in your forecast, or you've not included that in your forecast?
30 to 35% was in a net revenue. So I anticipated that and corrected it.
So that's revenue, but if margins stay the same, it would lead to growth in profit, right? So are you
Yes, yes.
implying that you've put it into the revenue, but you're expecting margins to fall?
A little bit because it also have to like Walmart's problem has always been controlling the expenses, so that could be a little bit risk. That's why I said the margin might
Okay,
have a
so
fall.
now go back down to the page where you show your weighted average cost of capital.
This one.
The page that shows your free cash flow calculations and your weighted average cost of capital and cost of equity.
Okay, since
There. Um, One of the things that's interesting is, you've got a very low 6.4% weighted average cost of capital. What's the risk that you are too, that's just too low?
I think it has a lot of competition of Amazon and like in the e-commerce industry. So if they survive the competition, I thought that could be a major risk, and also the supply chain issues.
Um, But I'm just saying, if we let's just see the 6.4 and the weighted average cost of capital, right? Now let's go to your sensitivity and see what happens if we increase the cost of equity. How does that impact the share price? So here we can see on the third part of this table, if the cost of equity goes
Mhm.
from 7 to 7.5, the share price goes from 101 down to 95.5. Um,
25.
so
Yes.
I guess my question is, you've got a 10% upside. Uh, how confident are you? Is, for instance, if somebody's thinking about allocating money, you think they should buy Walmart now?
If they're looking for steady and long-term growth investment, then yes.
Okay, let's look at some of the questions that we've got from Zishan. He said, looking at the stock price, it seems like it's in an uptrend. With your buy recommendation, you think the uptrend will continue, or what is your feeling about the share price movement so far?
Yes, I think it will continue.
Okay. And let's look at Moment says, what are your thoughts on Walmart moving online? Do you think that we can see a significant part of revenue coming from e-commerce? Like, what's the change that you're expecting?
I think moving on to online is going to have a positive impact. Like from now, they've been trying it for the past, I think 1 year, 1.5 year, but there was a there was a competitive edge there, and they also have this AI automation and controlling the costs and everything. I think it's going to have a positive impact.
Moment also asked, why don't you think that the stock is past its peak? You know, it's not, I wouldn't say it's cheap on a PE basis, and it's run. What makes you feel like, no, there's more to go?
Uh, can you repeat? There was a bit of noise.
So, Moment says, um, why don't you think that the stock price is at its peak?
Why do I think it's at its peak?
Why don't you think it's at its peak?
Okay, okay. Because the latest news they include that they've just automated 65% of stores, and also the Walmart Canada is also starting out many stores in Mexico. Yes, Mexico. So I think there's still a lot to go. It's not at its peak right now.
Okay, another question coming from Drew Barre. He says, if there's a shift in operations, like from people to robots and complete automation, won't the effective annual cost of the high capex required for the transition decrease profitability initially?
It could decrease profitability.
Yes. So there's a lot of spending that has to be done to implement the robots and automation. And the benefit of that may take time to come out. So does that decrease profitability initially?
I think it's like a double-edged sword. It could impact the positive thing, or also, but they're having a strategic with their strategic investments and everything. I think a positive impact is how I am seeing it. How I am seeing
Okay.
it.
And Trump is increasing the tariffs. What if the countries retaliate? So does Trump's presence negatively affect Walmart or positively? Is Trump good or bad for Walmart?
Um, I think just today I saw a post that Trump passed a law of like using AI at its best for US. So considering that, it's going to have a positive.
Okay, another question from Win. How are inflationary pressures and supply chain disruptions impacting Walmart? Let's say there are some people that feel like there's a lot of expectation of inflation in government bonds and in the market. How do you think Walmart will do if inflation turns out to be higher than what people had originally expected?
Okay. I think they already suffered with the inflation issue post pandemic, and also they miscalculated a few things. So I think like they've learned from that. and now I don't think there'll be an inflation issue.
So how does it feel to graduate from the Valuation Masterclass Boot Camp?
It feels really good. Uh, it feels like I've learned so much before. I didn't like like I said, I come from a science background, so before I didn't know any of these stories or knowledge, and I didn't know how to even write a report on like not even a company, but I didn't know how to write a report on industry also. So and I lacked a lot of confidence in finance and everything related to it. And the past 6 weeks, it felt like I learned so much, and it really feels great that I
Yeah.
survived the
Yeah,
six
it's a
weeks.
lot of people didn't make it, unfortunately. Let me ask you, what was the transformation that you went through in the boot camp?
Uh, I feel confident now. If anyone like before, I couldn't even join in conversations regarding this, but now that I know so much, like whatever I learned from the boot camp, I think confidence is what I transformed with this boot camp.
Okay, well, I just want to congratulate you. That was a great presentation. It's a good update too for all of us on Walmart and what's going on there. And so you should feel very proud about that. And then I will see you in the Slack channel.
Yes.
All right, hold on. Well, that was a great update on Walmart and a lot of developments that are potentially driving revenue very strong, whether that's automation, AI, and the like. But it seems like Walmart is pushing pretty hard. On a PE basis, it looks a little bit expensive, but on a free cash flow basis, I'd say, yeah, there probably is some upside. If you want to become an expert in valuation, why not join us? Here's somebody that could potentially join us, right? Hey, Andrew, I love your content. Thank you. So if you are interested in learning about valuation, or you're an engineer thinking about changing to work in finance, you're a finance professional that wants to accelerate your career, well, join us at valuationmasterclass.com. Have a great day, and I'll see you in the next video.